You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees, and it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back. It is Education Wednesday. Time to roll out the red carpet for not one but two episodes. Yes, it's time for another OBC doubleheader. So strap in. You're getting the goods today, listeners. Of course, if you're listening live on our pro side, you're getting it all right now. If you're listening after the fact, you'll get the second episode next week in the usual bat time, usual bat channel. If you want to join us on the pro, get the live, get options oddities, get awesome pro Q&As. We had our buddy who's been a frequent guest on this show, Mr. Matt Amberson, just diving deep into all your questions about skew and calendars and all kinds of fun stuff on our pro Q&A yesterday. If you want to join those parties, theoptionsinsider.com/pro is the place to go to get in there. You also get access to our giveaways and options oddities, all sorts of fun over there. theoptionsinsider.com/pro if you think you're ready to take that next step in your options trading. Let's take that next step on the show. Let's see who's joining us on the old program. I am pleased to welcome on the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call Mr. P, how go things in the land of Frankfurt, sir?
Hey, Marky Mark, how are you, my friend? Doing A-okay here. It's a little chilly, as you know, you're closer to the lake. You get that lake effect, wind chill factor that, you know, the Chicagoans might not know about, but it sucks. But hey, other than that, it's going great.
Let's see if it's going great with the show. We got an interesting one, Dan, in store for us today. I am very intrigued, so let's get to it. It is time for some options drills.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to the options drills. Going to do something a little bit different. Well, actually, a lot different. Quite simply, Dan, it's not often we could say we have a topic that we've never touched on in the well over a decade, well over 200 plus episodes, well over a decade in terms of years. It's something we couldn't even do technologically just a couple of years ago, Dan, but it was an intriguing one. We were messing around, as people like to do, because we all know we are in the age of AI right now, Dan. So we need to welcome our robot overlords here on the program. So you thought, what better way to pave the path for them than to check in with the various platforms and say, we've been doing this show for a long time. We've touched on a bunch of these different topics. But what do you, our new AI overlords, the robot masters of the future, what do you think would make for a compelling episode of Options Bootcamp? And Dan, we tried a couple of different ways. First, we went to Gemini, the Google AI. And we thought, hey, a lot of our shows, all the write-ups are in Google Docs. Should be pretty easy. Feed that to the Gemini and say, here's what we've done in the past. What do you think would make a good episode, following this format? And Dan, the Google AI that they've spent, I don't know, hundreds of millions, billions of dollars on, couldn't even handle a Google Doc. It choked and exploded on it. I was like, wait, you're the same. So that Google, forget about Gemini. It sucked. Ended up on ChatGPT, which is, of course, the big one. And we fed it some criteria. Not much, actually. We didn't really feed it that much. And guess what, Dan? It ended up spitting back out not one, not two, but fully 18 different show topics, in fact, titles, complete with subtopics and discussion categories within each one. And I have to say, they weren't terrible. I was more than a little surprised. Not all of them are home runs, but I thought, what better thing to do than take all 18 and throw them out there on the show to see what our listeners think and what you think about how AI did, what kind of job AI did, and also maybe there's some grist for the mill for future episodes here. So what do you think, Dan? Are you ready to go on an AI options-based journey with me?
Hey, man, if you can't beat them, join them.
Yes, we welcome our robot overlords here on Options Bootcamp. All right, Dan. Number one, I don't think these are in order. These are just the order they came out of the old robot device. I don't think this is the number one topic, but interesting. Number one, Dan, for what our robot overlords think we should be talking about in terms of options education. What are the top of mind, cutting edge topics in the world of options education? Number one, Dan, volatility and its impact on options pricing. And in terms of their discussion points, AI suggests discuss how volatility affects options pricing, including the concepts of implied volatility and historical volatility. Number two, dive into how events like earnings reports, economic data releases, or geopolitical factors impact volatility. Number three, introduce the VIX index as a measure of market volatility and explore how it influences option strategies. So overall, Dan, I was kind of surprised. That was a little bit more nuanced than I expected from a chatbot. But that's what we got. What do you think for episode one suggestion, Dan, and as well as the discussion points suggested, sir?
Damn, man. I mean, that's not too bad. Is there like, a voice thing on there? Can we just have the robot do the show for us? We'll sit back and drink some margaritas.
Welcome to Options Bootcamp. I am Mark Longo. I will now host the show. Actually, I'm probably one of the most easily AI replicable voices out there. There's tens of thousands of hours of my voice. Any even semi-competent AI could probably do a decent job of mimicking my voice. So there you go, Dan. You and I will be on the beach, and the robots will take it going forward. Obviously, listeners, we've touched on volatility a legion of times here on the show. I'll give you a couple you could dip your toes in if you want to go check out specific episodes. Episode 315, one we just did, November 20th, navigating volatility products. That's a good starting point there. We also talked about episode 314 right before it, post-election option strategies. The AI did suggest, of course, listeners, how events like earnings reports and geopolitical factors and other things impact volatility. We discussed that there. We talked about ETF volatility mysteries on episode 306 from September of this year, and Crazy VIX Stupids in episode 303 on August of this year. That's just a few episodes. We touched on volatility many times. But there you go. That's the first of 18, Dan. Number two, this one may be a little a little self-fulfilling. They want us to talk about them. They say the role of AI and machine learning in options trading, Dan. They say for discussion topics, explore how artificial intelligence and machine learning algorithms are being used by traders and firms to predict market movements and automate option strategies. And also, this is interesting for AI, discuss the ethical considerations and risks of relying on AI in trading. I like that, Dan. The robots are telling us, keep an eye on us. Don't trust us. But what are your thoughts on that as a potential episode topic, sir?
Yeah, talk about self-serving, man. See, that's what happens. Like they scanned the internet and got all this information off like Facebook and all these other social media that are designed to, like brainwash us and influence our way of thinking. They're working the system. They're like, oh, hey, maybe an episode on AI. How about that? How would you feel about that?
You should talk about us. We probably, if we were to do that, we probably would need to bring on some AI specialists, but it's not the worst idea I've heard out there, even though it is, like I said, a little bit self-serving. So maybe only a half point for that one there on the robots. Number 3, Dan, kind of a good one that for maybe 3 years ago, but still a good topic we've touched on many times. This is the rise of retail traders and their influence on the options market. Again, a pretty nuanced topic for AI to suggest, I thought. I was kind of surprised. I thought they were going to say, what's a call, what's a put. They kind of went a little bit deeper, which I was surprised at. Suggested discussion topics, Dan, are examine how the influx of retail investors using trading apps like Robinhood has affected the options market, discuss the increase in, quote, meme stocks, and how options have become a tool for retail traders to drive price action, and also investigate trends like the popularity of out-of-the-money, parentheses, OTM options and, quote, YOLO trades. What do you think? What do you think of this one, Dan?
I mean, we've kind of touched on some of this stuff, but I mean, I actually kind of like the first part of that. Examine how the influx of retail investors using trading apps like Robinhood has affected the options market. That I don't think we actually specifically touched on that one. I mean, we kind of touched on all the other stuff, parts of that, but there might be an interesting little niche there, I think.
Yeah, we could certainly explore this again. We've touched on the growth and the explosion of retail many times on the show, especially obviously post-pandemic. Listeners, if you want a specific episode example, listeners, go to episode 108 from October 14th of 2020, entitled Immersion Training, Retail Fever, Put Problems, and More. We kind of got into it there, but we've touched on this. Just the fact that you folks are coming en masse more every month to the world of options. We love it. We welcome you all here on the show at the end of the day. It's one of the reasons why episode 1 of this program has been near the top of our network charts ever since the pandemic. You folks are loving Options Bootcamp and loving Indeed, going all the way back to the beginning, the primordial ooze days of this show, and starting at episode 1 and working all the way through. So we love you all who are doing that. So not the worst example of a topic. We've touched on it many times, but maybe we could carve out some nuances there. Number 4, Dan, options for hedging against inflation and interest rate changes and their suggested discussion points. Explain how options can be used to hedge against inflation and rising interest rates. Discuss specific strategies such as the use of long puts, call spreads, and how options interact with broader macroeconomic conditions. Again, not the worst. Would have been more useful topic, let's say, 2 years ago. But not bad. We've done rates many times, Dan, but never really specifically about inflation. What are your thoughts?
Well, yeah, dated, and that's probably because when does ChatGPT go back to? When does their knowledge end? I know the paid, more recent versions are more recent, but I actually have ChatGPT open. I'll just ask her.
Ask the robot. When does your knowledge end?
When does your knowledge end? But that's probably why, because it was still, in inflation and stuff. October of 2023, so a little over a year ago.
Okay, interesting. So yeah, that would probably put that in a little bit more context there. So not the worst, But again, more nuanced than I expected. I certainly just expected what is a call, what is a put, if anything. And this is obviously more nuanced than that. So maybe there's something we could pull out of there, even though we've done rates a bunch of times. Just search for rates in our archive, listeners. And of course, variations on that like theta that we'll get to in a second. Number 5, Dan, exploring the risks of naked options trading. Dive into the risks and rewards of selling naked calls and puts. Provide real-world examples of how traders have encountered significant losses due to poor risk management in this space, and teach how to manage these risks through techniques like stop-loss orders and proper position trading. So again, not terrible, more nuanced than I expected, Dan. What do you think?
Yeah, I mean, we've talked about that. You know what? They're probably looking at our podcast to get these freaking ideas.
Yes, we have talked about that many times. How many times have we said, don't be net short units, don't be naked short options? That way lies madness. If you want a specific example, listeners, just from this year, episode 295 from July 3rd, we said naked short deltas and the dreaded banana theta. If you want to hear our thoughts on being naked short anything, go check out episode 295. So we have touched on that already, of course, but again, not terrible. You're right, Dan. Maybe they are ripping us off. Number 6, the impact of the SEC's potential regulation on options trading. Discuss ongoing regulatory effects by the SEC and other global regulators regarding options trading, particularly around options on meme stocks, options volume, and market manipulation. Explore potential future regulations that could impact retail options traders and the market as a whole. Again, more nuanced than I expected. And it could be a timely one, Dan, with the whole new Trump regime rolling in. One of the reasons markets have rallied so hard is because they think regulation's just going out the window. So there could be some grist for the mill to that. Dan, what do you think?
Yeah, I don't know if you saw the news. It just came out today on X.com and on Social Truth that Trump appointed Bozo the Clown as head of the SEC. And I don't know what his stances are on certain things, but I think he'll be great.
Would Bozo be better or worse than Gensler? That's the question people have.
He'll be more fun.
He would be more exciting. You play some games with him, even though I'm not a big clown fan myself. But outside of that, we could see. So there could be. We've steadfastly avoided regulation on the show, Dan, because it's not the sexiest topic. But hey, if our AI overlords tell us to do it, I guess we have no choice, Dan. We have to do that. So maybe stay tuned for an upcoming regulatory episode, listeners. Strap in for the excitement therein. Number 7, Dan, option strategies for earnings season. Analyze the various option strategies that traders use during earnings season to capitalize on volatility. Discuss strategies like straddles, triangles, and iron condors. Explain how to assess implied volatility and how it can influence options pricing around earnings reports. So again, a strategy, a topic we have discussed many times, but still a little bit more nuanced and specific than I expected from the Robot Overlords, Dan.
Yeah, they're transcribing our show and scraping it and spitting it back right out to us. Sons of guns.
I'm going to go send Microsoft an invoice after this show, Dan. How dare they rip us off to our own show, to our own faces, Dan. How dare they? Listeners, if you want some specific examples, obviously we've done a legion of episodes on earnings trading. Most recently, episode 303, NVIDIA straddles earnings time spreads and crazy Vic stupids, from August 28th of this year. Also, episode 297, hedging NVIDIA and Tesla, July 17th of this year. Earnings volatility, episode 293 from June 12th of this year. Episode 277, NVIDIA madness, February 21st of this year. Trading options in high skew environments, episode 275 from February 7th. I could go on for hours here, but there's a ton of episodes if you want to sink your teeth into these topics that obviously ChatGPT is listening to. Number 8, Dan, another one kind of weird and a little dated, but interesting. The growing popularity of weekly options, Dan. Examine how weekly options have gained popularity in recent years and the opportunities they present for short-term traders. Discuss the differences between monthly and weekly options and know how they affect options pricing, liquidity, and strategy planning. Now, obviously, Dan, weekly is not exactly the sexiest topic anymore. We did talk about this, though, you and I, all the way back on episode 151, entitled Weeklies versus Weeklies. versus Quickies, September 8th of 2021. That was obviously, Dan, in the pre-zero DTE era. Now I think everyone will want to talk about zero DTE, which is why I think this is a dated topic. They don't even mention zero DTE, one of the things the robot overlords missed. But what do you think, Dan? A whole episode on weeklies again?
If I said it once, I've said it 1,000 times, Mark. Weekly options will never catch on.
Yeah, who's going to want those stupid things? Expiration is once a month, and never shall it be closer, listeners. Number 9, another one that was kind of hot, I'd say a few years ago, but, again, maybe going back to your dated data set, Dan. But number 9, the gamma squeeze phenomenon in options trading. Explain the mechanics behind a gamma squeeze where options trading leads to sharp stock price moves. Provide real-world examples, such as the GameStop saga in 2021, and how options traders can potentially profit or lose from such events. Again, not bad. We did this ourselves, listeners, episode 172, entitled What the Hell Are Gamma Squeezes, from February 2nd of 2022. So if you want to go deep, check out that episode. But Dan, I don't know, do we need to revisit gamma squeezes, sir?
I think Miss ChatGPT is in like a fugue state or something like that. Maybe, she had a closed head injury or car accident or something like that. Forgot, well, I guess didn't learn, the last year and a quarter of time.
They're still learning, Dad. The robot overlords still learning. Number 10, listeners, leveraged and inverse ETFs in options trading. Dive into how leveraged and inverse exchange traded funds are used by options traders. Discuss the pros and cons of trading options on these products, especially given their short-term trading focus. That's interesting that the bots picked up on that. And the risks involved in holding them over the long term. We've already touched on this many times, mostly from the volatility perspective, listeners. Most recently, episode 237 from May 17th of last year, entitled Crossing Zero-Day Franken Products and More, and episode 157 from October 20th of 2021, called The Dark Side of Short Puts, Taxes, and Leveraged ETFs, if you want to go check out 2 episodes already on this, listeners. But Dan, what do you think? Do you think we need to dive back into the world of levered and inverse ETFs, Dan?
Yeah, I was gonna, berate our friend ChatGPT again for scraping our own show here, but I kind of started thinking if they're translating or transcribing our show and like reading what we say, like once they get powerful enough, they might come after us. So we should probably say some nice things about them.
Welcome to our robot overlords. So yeah, this one, not terrible. Again, we've done it a lot through the volatility lens, but there are other offerings out there we could explore that are inverse and levered. So it might be worth an episode in the modern OBC era, listeners. Number 11, Dan, this one surprised me at how nuanced it was. Number 11, the role of market makers and liquidity in options markets. Provide an overview of the role of market makers in the options market and how they contribute to liquidity. Discuss how options traders can find the most liquid options to trade and why liquidity is important for successful trading strategies. Again, wasn't expecting something on that level. We have, of course, Dan and I, both being former market makers, have talked about market makers on the show before. If you want to go check out episode 184 from May 3rd of 2022, entitled Tales from the Trading Floor, Volume 1, or episode 294 from June 26th of this year, Tales from the Trading Floor, Part 2, we do touch on market makers. But Dan, I don't think we actually have sat down, you and I, on an episode and said, here's exactly what market makers do. Here's the function they provide, and here how valuable and maybe how that's evolved in the modern era. What do you think? Think there's value in an episode for that, sir?
Actually, yeah, because the times we've talked about it, tales from the trading floor, it was kind of more stories and that kind of stuff, which is useful, educational, entertaining, I think. But I don't know if we ever really just went super deep into what a market maker does or whatever. Loosely, of course we did a lot, but I don't know if we ever did a really big deep dive.
Yeah, I don't hate that as an episode topic. So I'll score 1 for our robot overlords there. But then number 12, Dan, they get back to the dated topics. They say options trading in a low interest rate environment. Discuss how the current low interest rate environment impacts options pricing, as well as strategies for traders looking to generate returns in such conditions, and explore how low rates affect the cost of carry in long options positions and the shift in market behavior. Obviously, listeners, we haven't had low rates in some time. If you want an episode where we do dive into that, go back to episode 91 from June 17th of 2020. So in the heat of the market meltdown and subsequent rally, rates were actually effectively zero or negative. In fact, our episode was entitled Your Questions About Diagonals, easy for me to say, Negative Rates and More. So Dan, zero low rates, not exactly an issue right now. So I don't know, but interesting nonetheless, sir.
Yeah. I don't know. A lot of times with ChatGPT and really even other stuff, like even some of the scanners, the scanners that I created to get trade ideas like Credit Spread Genius and all that, like I'll look at it for an idea and I won't like the idea that it spits out in and of itself as it is, but I'll piggyback off it. So, we could steal the idea and just tweak it. Options trading in the current interest rate environment or higher rate environment or something.
And we have done the impact of rates on options pricing in the past, listeners, but maybe it's worth revisiting. Let us know if you want to hear that, listeners, kind of inverse of what the robots had suggested for us. Number 13, already come up against it. Got to get rolling. a lot of suggestions from the robot overlords this week. The concept of, quote, theta decay, Dan, and time value in options. Teach your audience how time decay works in options trading and why it's so important when selecting expiration dates. Discuss strategies that take advantage of theta decay, such as selling options, and explain the risks involved. Again, not terrible, more nuanced topic suggestion than I expected from a chatbot. We have obviously done this many times, listeners, including episode 192 from June 29th of 2022 called Managing Your Theta. Episode 137 from June 2nd of 2021, Revisiting the Dark Side of Theta. And episode 122 from February 10th of 2021 entitled Mysteries of Theta, Delisted Options, Bitcoin, and More. There's just a few examples of the many episodes we've done about Theta. Dan, are you surprised that the robot overlords know about Theta?
Well, no, I'm not surprised by that because I've looked at ChatGPT for option stuff a lot of times. The idea of coming up with it as an idea for a show is, it means she's doing her job. It's working, because it is a good idea, as we know, because we've done it already. But yeah. AI works kind of sometimes.
A little bit on occasion.
Yeah.
All right, let's keep rolling here. Number 14, Dan, this is an interesting one. Synthetic option strategies introduce synthetic long and short positions as well as synthetic covered calls. Discuss how these strategies mimic the exposure of traditional positions, but with lower capital requirements. We have talked about this, listeners, but it's been a while since we've devoted a full episode to it. The last full episode all about synthetics was episode 18, all the way back, Dan, in the primordial ooze days of March 6th of 2013, entitled, appropriately enough, Dan, The Joys of Synthetics. So maybe we're overdue for a little bit of RevCon talk. What do you think?
Jeez Louise, that was, oh my goodness, that was like 11 and a half years ago, over 500 episodes ago. Oh my goodness.
Many of our current listeners were just sucking on a binky back then.
Yeah.
Let alone talking about synthetics. So interesting stuff. So maybe the robots got one there. Number 15, Dan, options on cryptocurrencies. Explore the growing market for options on cryptocurrencies like Bitcoin and ETH. Discuss the differences in how these options are priced and traded compared to traditional assets, and how the volatility of crypto markets influences option strategies. Obviously, we have done this many times, listeners, most recently episode 308 from a couple of months ago, October 2nd of this year, entitled Crypto ETF Options, Semi-Straddles, and Put Skew. Dan, do we need to dive deeper into crypto options, sir?
I think we've talked about them kind of a fair amount, really, including the pretty recent episode. I don't know. Honestly, there probably will be more opportunities to talk about it because, Trump is a crypto sort of fella, and crypto will probably be in the news a lot more over the next 4 years. So opportunities will probably present themselves.
Yeah, we're not done with it, listeners. We're probably going to table it for now. We just did the whole IBIT episode and everything else. But as more products come online, certainly worth revisiting. Number 16, listeners, managing and protecting profits in options trading. Focus on techniques to lock in profits or prevent losses as the trade moves in your favor. Discuss trailing stops, rolling options, and setting targets as a part of a comprehensive risk management approach. Obviously, we've discussed hedging many, many times here on this program, listeners. And it also dovetails with a recent listener question we had about using stop orders with debit spreads, I believe it was. So we have talked about, not specifically through the lens of, hey, you made money and now you want to protect it, but that is a use case that is implied in hedging. So Dan, I don't know, you think we need to add anything else on the put side as we're coming up against it, sir?
I think that there's a lot we can do on this topic. So maybe not revisiting the things that we talked about, but maybe sort of expanding horizontally on that breadth of topics that fall under that set.
All right, we're coming up against it, so let's squeeze in the last couple here. We got to get to episode 2, Dan. The live folks are waiting. Let's go to number 17, the psychological side of options trading. Dive into the psychology of options traders, including common emotional pitfalls such as greed, fear, and overconfidence. Provide tips on building mental discipline and staying focused on risk management. If you want that, listeners, go back, check out episode 147 from August 11th of 2021, entitled An Epic Trader Psychology Spectacular, Dan. I know that's a big area of focus for you. What do you think about the robot suggesting it?
Yeah, that one I'm kind of surprised that the robot came up with, but I remember that episode and I really enjoyed that one. We could probably do some subsets of that episode and drill down a little bit more on some of the stuff we talked about, or even go back and review it and see what we missed. That one couldn't hurt either, man.
Yeah, and then number 18, Dan, to wrap it up here, the impact of earnings surprises on options prices. Examine how earnings surprises, both positive and negative, can cause volatility in options prices. Discuss how to use options to play earnings reports and how to protect against the risk of an unexpected earnings result. Obviously, I just listed a whole bunch earlier, listeners. We've done earnings options trading many times, never through the lens specifically of surprises, but again, not terrible. Dan, all in all, how would you rate the suggestions, the 18 suggestions from our robot overlords, sir?
I would rate it probably exactly as I would have rated it if you'd asked me what do you think the rating's going to be after the fact. I'd give it a pretty good solid B, which is what a lot of the stuff that comes out of ChatGPT is. It's good. It's useful. It's never like sparkly and perfect and super innovative, but it's good.
I color myself pleasantly surprised by this. I expected 1 or 2 suggestions and maybe just one-line things, very basic, and that was it. I didn't expect 18. I didn't expect nuanced discussion topic suggestions. So, obviously we've done most of this already, which shows, I guess, we're doing our job, Dan, as options educators here. But yeah, this kind of surprised me. I don't hate all their suggestions, and maybe we actually got a couple of things we could work with for future episode topics. So overall, I say to our future robot overlords, well done. I tip my cap to you. When it comes time to enslave us all, enslave me last is what I'm saying. Take Dan before me. In the meantime, Dan, if folks want to take some of your lessons, where should they go? What should they do?
Come on over to markettaker.com. Market as in stock market, taker as in take what is rightfully yours, 2 T's in a row. Come over to markettaker.com and you can reach me there. You can join our chat room for free at this time, get some free classes, and I'm happy to interact with you if you DM me on the chat room.
And of course, listeners, make sure you check out the folks who have been supporting the show. If you're amazed, we have episodes going back to 2013. Yeah, the reason we're able to do that is because we have great sponsors who have supported this show from day one, including right now the folks over there at Public. Public.com/options bootcamp. Very easy URL to remember. All you got to do is go to it, and that helps support the show. If you want to kick the tires and light the fires while you're there, maybe get paid a rebate to trade options. Not the worst thing. Public.com/options bootcamp. The place to go. Meanwhile, we got to get on out of here. Pro folks listening live, I will be back immediately in your ear holes, Dan in tow, for episode 2 of our doubleheader. And then after that, if you're not done with Dan's, we got Dan squared there. Buddy Dan Gramzo will be joining us for a little bit of the futures rundown. For all you listening on demand, we'll see you next week, another episode of Options Bootcamp. Stay safe out there, everybody.
If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/options bootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.